quarter 6, first day, day 1, week 1, month 1 of the 36-month challenge. I'm up early, nobody else is, and breakfast first, and then upstairs to do my pre-market analysis. Not really pre-market analysis because the market opened at 10 o'clock last night, but important to get up early. The early bird catches the worm. So let's see what the day brings. So a couple of trades I've taken, one at 6 o'clock this morning and one just now at 10 o'clock on the close of the 4-hour bar. I wasn't quite expecting to get into a couple of trades straight off, but when the signals show up, providing they make sense, they're in line with my rules, then I'm going to take them. Although there's slight trepidation, this being the first day of the challenge, but never mind. So the first trade I took was on the Aussie dollar. Basically, I sold off this candle here. This is on the 240 chart, the 4-hour chart. If you look at the daily, you can see what happened. The market gapped up here over the weekend, and then selling came in and pushed price down. So this hasn't closed yet, this daily candle, of course, but there's a probability that this will close on an X reversal candle. I took this. Where are we? Sorry, that's the pound. I'll come back to that. I took this sell off this candle, which was the 2 a.m. candle. The market had moved in the direction of the trade, so I got in slightly late, which is not normally something I like to do. But given the fact that this gap had closed down underneath the range top, the fact that I was looking at this on Friday before I closed out all trades, I decided to take this trade. So this is my range strategy. I've got my order here, my buy limit here to take off 50% of my position, and then we'll roll on and see where we go. I've taken this both in my private broker accounts and also in eToro. So that's one trade. This is, of course, long the dollar. I have also taken a trade just now at 10 o'clock, which is long dollar, short pound. So this is pound dollar cable. I was looking for this breakdown below the 200 simple moving average and the 50 simple moving average. Big volume down here on that 10 o'clock bar. If I look at the daily, you can see as I define the market, we are below both the daily 200, daily 50, and we're inside this range. So Golden Gate strategy is one where I look for price to have moved through some of the moving averages. There is downward pressure on this market as I see it, so I'm going to hold to the bottom of the range, take off half the position, and see where we go. If I look at the news we had overnight, I don't trade fundamentals, but it's interesting. Some of the news out of China has been negative, which could be weighing on the Aussie dollar. We have where is it? Yeah, US dollar news, manufacturing PMI, purchasing managers index at 3 o'clock. So I'm out over lunchtime. I'll be back by then to see where we are. So what I might do is tighten up my stops just in case this delivers some negative news for the dollar and reverses me out of my positions. But we'll wait and see how that plays out. The other thing I just wanted to showcase is the reason I'm making the decisions I'm making. This is my weekly market analysis sheet. If I look at the pound here, the second trade, the 10 a.m. trade, you'll see we have sell signals all the way. We're in a range, selling on the monthly, selling on the daily. Where are we? Sorry, selling on the weekly, selling on the daily. The 10 exponential moving average is a buy, but that's okay. We can have differences of opinion here because we're in a range. That's expected. But this is important here. This is my IG sentiment indicator. So I look at the positioning of traders, retail traders, through IG, which is one of the brokers that I've used in the past. When the retail market is at an extreme, then I tend to go the other way. So you know, if you believe the thing that 95% of retail traders lose money, well, one of the ways to be right is to go against their position, and I do that only when they're at an extreme. So I won't go against this indicator in the direction of my trade. So selling cable is fine. Similar story on the Aussie dollar. So yeah, look, sell signals, we're in a range, so we've got some buy signals here, that's fine. In fact, if I look up here now, yeah, so these will have changed now, sorry, on the cable just before we move forward, because they're sell signals now, we've closed below. So this is starting to set up a really strong sell position. Back to the Aussie. Here I have a sell signal on my IG sentiment indicator. It's not at an extreme retail position, it's not in an extreme, so I could go against this, but it's nice that I'm in line with that. So all in all, pretty comfortable with how these trades are playing out. I'm going to leave these to work now. I'll check the charts again at 4 o'clock, but so far pretty pleased that both of these positions, the pound and the Aussie, are already in profit. I tend to find that if I enter a position and it moves into profit fairly quickly, then it's usually a good trade. If it doesn't, then I probably should think about exiting. And I have specific exit rules, but this red line here, that should be a dot. Oh, it is. Sorry, dash small. There we go. This red line here. If price comes back to here, I ask myself the question: do I really want to be still in this trade, or should I get out? Similarly, on the pound, if price gets back to here, do I really want to be in this trade, or should I get out? So it's kind of a mental question mark here. If position is reversed half towards my stop, that's what I need to be. That's what I need to be thinking. So quick update. A bit red in the face. Just been to my jiu-jitsu class, which I do pretty much every lunchtime. Break up the trading day. And helps to get away from the market, do something different, do some exercise, come back in time for the 2 o'clock close and see where we're at. So in terms of the two trades I made this morning, let's take a quick look as to where we are. So first off, what you'll notice here, I just had the US news out. Where is it here? ISM manufacturing, and that came in slightly better than expectations. That's usually favourable to the dollar. So if I look at my two positions, we'll see the pound dollar short, the cable short I've got on. Entered here on the close of this candle on a golden gate strategy. Had a bit of a reversal, but we've come back down and we're now pushing down towards my entry. So trade's working as it should do. I start to worry if we get back a bit into this warning level, where I ask myself the question, is this trade still valid? And then we've got the Australian dollar, the Aussie. This is now in profit. So I entered here. We're now here, pushing down towards here. Gonna have to watch out for this level here on the 50 simple moving average on the 240. My first target's here. Take off half the position, but nothing to do. Both trades are behaving as they should do. On the cable, you expect a little bit of a pull back before further downward momentum. So I'm just going to hold and see where we get to. Wow, what a beautiful day in the UK. We don't often get this weather here, so you've got to enjoy it, and I will be doing that a little bit later on. My office is filled with iPads. When you've got young children, you tend to ban these quite often. But anyway, just thought I'd show you my trading setup. It's day 2, by the way, of the 36-month Forex trading challenge. I have a fairly simple setup. I've got 3 screens, 1, 2, 3. Screen on the left, that's got my eToro account on there. I also, on here, if I scan across, have my records and my weekly market analysis and all that good stuff. Middle screen, I do my stuff on, my notes and what have you. And then of course over here, I have my Trade Navigator charting package. Got the morning refreshments, water, keep hydrated, particularly in this weather, and the protein shake. I talk about jiu-jitsu in today's blog post. You can find that at stgforex.tv. That's stgforex.tv. I talk about jiu-jitsu. I train jiu-jitsu pretty much every lunchtime, and jiu-jitsu is a great thing, great martial art for trading, I believe, anyway. So there you have the trading setup. In fact, let me just show you this as well. I have my trading plan here. Trading plan needs to be close at hand. Got all my notes in there, all my rules, etc, etc. And then I have my journal. I guess you call this a thinking journal. There we go, 36-month Forex trading challenge. And every day I make notes, having analysed the market, as to what I'm watching. That means that I'm not stressed out about, well, should I watch this, should I watch that? I know today I've got 2 positions on. I'll talk about those in a moment. And then I've got a number of pairs that I'm watching where signals may show up, and that's it. So let's have a look at the trades that I'm currently in. Okay, into the charts, and I've got a couple of positions on, but before I talk about that, just some news from the Reserve Bank of Australia last night. I don't trade the news. All I do with regard to news is make sure I know when it's out, so I can protect myself. Let's get rid of that. So what I did on my Aussie dollar trade, which I opened yesterday, what I did is I rolled my stop overnight just inside my entry. This means this is a winning trade. What that means is that I can now, with my correlation risk rules, go and look for another USD trade if a signal shows up. You can read more about correlation risk and risk management, money management in today's blog post, actually. If you go to stgforex.tv, you'll see that post there. Reason I moved the stop to here, you'll see that when I set this trade, I had a risk here of this amount, and I had a reward here of this amount to my first target. So it's a 1-to-1 reward to risk. But when price came down to here overnight, what you'll see is that my risk was this distance, yeah, and my reward to my first target was this distance. So it was kind of an inverted reward to risk ratio. So what I did is I tracked this back to say, well, okay, if we're here, what's a 1-to-1 to my target as compared to where my stop should be? So I roll my stop to there. Based on the news, the reaction to the news, at about 5:30 this morning on the 6 a.m. candle, there were bids. Those bids were capped about this level, 0.6984, and we're kind of undecided here. A little bit of offer activity, but we'll see. Doesn't really matter. Whatever happens, this is a winning trade. It's a risk-free trade, so I'll either come down and hit this, or we'll get stopped out. But it doesn't matter. A winning trade is one where you follow your rules, and I followed my rules to the letter on this one. In terms of the cable, the pound dollar, yesterday entered on the close here of this high volume candle. It's high volume because it's a long candle, and it closed near the base, so showing strong offer volume. Difficult to get a gauge for volume in the Forex markets because there is no central exchange, but the length of the candle and where price closes on the candle is a good indication. I have used in the past the futures, Forex futures, to give me an approximation for volume, but I didn't find it particularly useful, so I just rely on the spot price now and the spot candles. So entered here, we traded sideways most of yesterday. You tend to get that after a big move, or a relatively big move. This is range mode, the market I've identified, so I'm trading a golden gate strategy. That was triggered when we traded and closed below these simple moving averages. This was probably some stop running here, so the reason this candle was quite high volume. People would have had their stops here, particularly day traders. As the market traded down, they would be panicking for the exits. They'd be selling out their bid positions. So that's probably why we closed on this high volume level. So yeah, we're in a good position, slightly under my entry, so this trade is in profit, and we'll see where we get to. Just on the blog post that I mentioned, let me just drag this across. This is what the blog looks like. This is on a blogger account. You'll see the post today where I talk a bit more about risk and money management. So feel free to go and take a look at that. That's stgforex.tv. So day 3, what can I say? Beautiful sunny day again here in the UK, and yeah, pretty good couple of days actually. I'm pleasantly surprised. I think it's always nice when you have a challenge, whatever challenge it is in life, that you get off to a good start. And got a couple of trades that are, well, one trade that has closed out, partially anyway, with a profit. Another trade, actually, I'll talk about this on the screen in a moment, but basically, day 3, 1.24% booked profit on the way to the 10% monthly target. So in good form on day 3. What I'll do now, I'll jump into the charts and just explain kind of what's going on and what I'm thinking. Really pleased with the morning routine that I'm running, the discipline that I'm running. Basically, what I do, get up at around about 5:45, and I review all of the 23 currency pairs. I'm looking at relative strength yesterday to one another, or previous day. I'm looking at relative strength overnight, and then I'm looking where the price action in each pair is in relation to the basically the 200 simple moving average, the 50 simple moving average on the daily, on the 4-hour chart. I've done the weekly stuff and the monthly stuff prior, so I know where they are, and I'm looking for things to line up. I also consider the retail trader sentiment. I tend to fade that, so I'm a contrarian on that. So if you believe that the majority of retail traders lose money, well, part of the strategy and part of my strategy is to say, well, okay, what's the majority doing? Let's go with the minority. So that all plays into the strategy, and I'll divulge more of my strategy and what I'm doing as we go on. But let's take a look at the charts now. So the first trade to look at is my cable shorts, pound dollar short. Got in here on the first day of the challenge, Golden Gate strategy, closed below these simple moving averages. So I sold here. Target 1, or initial target, T target as I call it, was hit this morning. I put that in line with the bottom of the range. I believe my assessment of market conditions is that this range is going to be broken to the downside. So I'm now holding this position. I'm not buying the bottom of the range. The reason I believe the probability lies in the fact that we're going to continue and break the bottom of the range is based on my weekly market analysis, whether simple moving averages are in relation to price, and also the retail sentiment indicator I use is all pointing in one direction, and that's south. If we do break below here, what I'm going to be looking to do is to add to this position. So I've got one position on. This is a risk-free trade now. If we get below here, I'm going to look to add one more. So I'm pyramiding into positions always based on momentum. So pyramiding in based on momentum. So pretty happy with this trade. Let's look at this trade, which I've just put on. This is my full house strategy. This is on the loonie, which is US dollar CAD. So I've sold this pair. There was a Z signal here. The 30 exponential moving average and the 10 exponential moving average are in line. All of the SMAs, all of the exponential moving averages, and the retail sentiment indicator is pointing south. Put my target here, initial target here. We may test the 1.3000 level, but now I'm just going to wait and see. I've got overhead protection from the 50 simple moving average, which is angled down. So high probability trade given my setups, but you never know, which is why I have a stop loss, which I never move. And then the final trade that's in play today is my Euro Japanese yen short. My assessment this morning was that the strongest currency pair overnight was the Japanese yen. So it looks that people are buying the yen for whatever reason. That tends to be a risk off trade, so people are nervous about something. It's a safe haven currency. People tend to buy it if there's bad news in the world economy. So where are we? Let's just wait for this to load. See if I can get into this trade. Okay, yeah, so this is not a too dissimilar trade to the cable trade that I'm trading. I got in here. We're tracking down towards the initial target because I got this X candle here, which is partly probably bids off this consolidation level here. I believe this is the day trader in action. I have rolled my stop ahead of hitting the target behind 60-minute market structure, 20 points behind. So I've got a small profit locked in here, but I suspect we're going to get down to here again. All of my indicators are pointing south. I look at something called evolving risk reward. In fact, I always get that the wrong way around. What I mean is reward to risk. So if I left my stop up here, let's say, the distance between my stop and where price currently is from here to here, but my distance from price to my target is smaller, so I have an evolving inverse reward to risk ratio. So having brought this stop closer, effectively price is trading right between my entry and right between my initial target. Having brought this down here in line or behind 60-minute market structure, what I've done is put the reward risk ratio back in my favor again, because you always want to be having the potential to gain more on a trade than you risk on a trade. And the reward risk ratio on any trade is never static. It is changing all the time as price moves. So yeah, risk-free trade here. We'll see what happens. Yeah, just watch and wait. Patience is a virtue, as I put in the blog post today. I talked about Jesse Livermore of the reminiscences of a stock operator fame, and I'm just going to go into the blog here and see if I can drag this across. Where is it? DTD month 1 day 3. Let's throw this across here. Talk about algos in here as well, algorithms. Where is it? I've got the quote here. I don't want to misquote somebody. What is it? Where is it? It is here somewhere, and it will be in italics. Must be down here. Yeah, here we go. So Jesse Livermore said, "It was never my thinking that made the big money for me. It was always my sitting." And that means once you get into a trade, don't overanalyze. You've got into it for a reason. The job now is to sit and wait. Go and do something else. Don't stare at the charts. And that's exactly what I'm going to do. I'm off training again today. Midday training always puts me in a good state for the rest of the day. So yeah, over and out, and we'll see where these trades get to. Well, good morning. It's 6:30 on Thursday morning, and first of all, happy Independence Day, American Independence Day. Just seeing that pop up on my screen. It's 6:30. I'm about to drive to Ascot, about 2.5 hour drive. I've got a 2-day conference with the ICAW, Institute of Chartered Accountants in England and Wales. I'm a member. That was my first job back in the day. So got a long drive down there. So what that means for the trading is that I've got 2 open positions, both of which are fully protected. So whatever happens, I can't lose. Not much is going to happen in the market today, I don't think, given the fact that most people will be on holiday over in the States. We'll roll that into Friday. We've got non-farm payrolls. So probably not the best time to be in the market. So sometimes you've got to know when to stay out just as much as to when to get in. In fact, staying out sometimes is more important. So with that said, going to have this drive down. I will check in on my my charts a little bit later on, but what I don't want to be doing is doing the market half-hearted. If I do it half-hearted, I'm going to make mistakes. I'm either in or I'm out. 2 fully protected positions. The first week of the challenge, currently booked profit is to the tune of 1.7% on opening capital. So we're on good track to make this month's target. So that's really it. I'll check in a bit later, but now it's time to do the thing I always like to do in this car. This never gets boring for me. So let's start the engine. Wow, what a drive. 3.5 hours to get down to Ascot. Finally arrived. M25, terrible traffic. Remind me never to drive around the M25 again. Just checked the markets as suspected, it being 4th of July, nothing really doing. So into the conference, and yeah, we'll see what happens there. But yeah, just maintaining the positions that I've got. Both are protected, so in quite a good position. And both hedge the US dollar. Cable is short, and the loonie is short too. So yeah, on the pound trade, effectively buying the US dollar. On the loonie trade, the CAD trade, effectively selling it. So yeah, we'll see where those trades end up, and I'll check in later and see what's what. So quick update, conference is finished for today. Got a dinner tonight, just got an hour's downtime. So in the hotel room, and first thing I do, get the laptop on. Trading or managing trades on the move is difficult. Smaller screen, you can see behind me, I haven't got my dual screens. Makes life difficult, but it's not impossible. This is one of the reasons, aside from the fact that it's an American holiday today, and it's non-farm payrolls tomorrow, that when I'm on the move, I try not to get into new positions. The chances of making a mistake is very, very high. I'm not in my usual environment, so I could quite easily make a mistake that could cost me. So yeah, I'm going to have a quick look at the charts now, take you through what's happened, what I'm doing, which is not a lot, and it's going to be a quiet finish to the week. Didn't do a blog post today. Really, there's nothing happening. So I'm going to roll today's blog post into tomorrow with a quick update. Hopefully we'll get some action overnight, maybe get some targets triggered, but we'll see. Okay, so into the charts, you'll see my pound dollar, my cable short, just consolidated sideways today. No real volatility in the market. My stop's quite a way away. Just gonna ride that out. And see where we get to. I may pull my stop slightly tighter just to lock in a bit more profit overnight, depending on the 10 o'clock close, but we'll see. Then jump into my CAD shorts. This has been a little bit frustrating today. I trade through my private broker account and also through eToro, which is my social trading platform. And what you'll see on this is that today price came down. I've raised that target slightly by 3 points, but basically price came down and touched my target. It triggered, for some reason, it didn't, well, it's the spread. In my private broker account, it didn't close me out of the position. That's fine. But in eToro, what it did was it didn't close me out of my first position. And what it did is it entered a second position, which shouldn't happen until the first position is closed out. Basically, because of some of the ways that eToro works, it's more difficult to automate closing. Well, in fact, I think it's impossible to automate closing out a partial position. So what I do is I set 2 positions. I close out the first position here, and then if that triggers, I open half a position to move forward. That replicates me taking off half the position at my initial target. So now I'm left in a situation where this trade potentially in eToro could be a marginally losing trade as a result of the fact that the target wasn't triggered and I wasn't exited from my first position. So, you know, c'est la vie, that's trading. We'll see what's what. I've as a result, I've tightened my stop. You'll see this reversal candle here. So I've tightened my stop here. So at least I've locked in some profit on both eToro and private broker account. I raised this slightly so that it's inside, marginally inside the low of this candle. But what you see from the black line here is that we did in fact close below this low here, which is an indication, certainly the way I see the market, that there's more downside potential. Also, if you see where that black line is, there is a potentially what I call trend continuation. Price has come down, bang, it's come back up on the bids. It's going to then test this level again before dropping further. But who knows, time will tell. My job is to protect myself at all times, which is what I'm doing. Slightly unfortunate as to how these things have played out in eToro, but c'est la vie, that's trading. So follow the rules, keep following the rules, run the process, and the prize will take care of itself.
Morning, it's Friday morning, non-farm payroll day. Yesterday, quiet day in the market with it being a US holiday. Bright and early, didn't sleep great, never do in a hotel, but still managed to write the blog post this morning. Not done the analysis on Thursday or Friday due to being away, and also the fact there was a holiday, and yeah, I'm on a conference all day again today, but you know, things sometimes get in the way, and the best thing to do sometimes is just manage the positions you've got and sit on your hands. So I will do a wrap-up video a little bit later on today, just talking about all the trades I've been in this week, what's happened, where we are at in terms of the numbers. But yeah, at the moment eyes are on 1:30 p.m. UK time when the non-farm payrolls number comes out. I think we're going to see quite a bit of volatility, particularly as the market was quiet yesterday. And when you get volatility, what you tend to find is that the stop losses, particularly the day traders, they're pretty close underneath their entry points. If those stops get triggered, the news could trigger the market to make quite a big move in one direction or another. But it doesn't really matter to me. I know what I'm doing. I'm following my plan, and we'll see what happens later.
So it's Saturday morning, and finally made it back from Ascot yesterday after a very, very long drive. Had planned to record a quick update video last night, but it was pretty late back, was pretty tired. So recording a quick video on Saturday, not something I would normally do. Try and keep the weekends, apart from the analysis that I do pre-market, pre-Sunday Open, try and keep them fairly free. But anyway, going to give a quick update on everything that happened this week. Been a bit of a blur. It was difficult trying to manage positions while I was away, but I think I made a decent job of it, and as always the numbers speak for themselves. So I'm just going to drag a couple of things across to the screen now. This is my weekly trade management sheet, and this kind of summarizes what happened this week, and then I'll reconcile that with my trade records. So basically, this is my analysis I do on a Sunday of the weekly relative strength. I do this every day, daily relative strength, the absolute relative strength, and the change in relative strength. You can see I didn't do this on Thursday or Friday because of the conference I was on. So NR non-recorded, and then the overnight change. So I look at relative strength at the three levels, the weekly, the daily, and overnight. And then I consider whether it was risk on or risk off. What that basically means is risk on is kind of people buying the Aussie dollar, New Zealand dollar. It's more of the high yielding currencies. Risk off is people are going into the Japanese yen, Swiss franc, US dollar, safe haven currencies. So ND means non-determined. You can see on Monday it looked to be risk on, not recorded here. So this is what happened this week. Anything in green is currently open, anything in red is closed, and anything in orange is yet to trigger. So it's an order in the market. This is a sell limit on a range top sell, which I'll show you in a minute. So basically this is the number to look at. This is booked profit for the week. So 1051.73 in terms of my risk exposure. This is locked in profit. There will be some broker fees to come off this, but that's locked in profit. This is the order, the sell limit yet to trigger. So pretty decent. And what that means in terms of my trade records, where I record the detail of every single trade. There was something I've read a couple of times, the people who keep good records are the people who are successful in trading. So keeping good records is always something I'm very, very keen to do. So you'll see that number again here, 105173. How that made itself up this week, I've had 4 trades, one still open. So I had 3 winners, 1, 2, 3. Opening capital, they were only short trades, so there were 5 short trades, 1 yet to trigger, which is the orange one here. So opening capital on the short account, 25,000. We closed out, well, we didn't close out, but booked profit on the short account, 26,05173, which is adding that number in I just showed you. Of course, I've got the long account as well, which I've done nothing in. So what that means in terms of my challenge, because I'm looking at a £50,000 account, what it means in terms of my challenge is that at the moment I am 2.1% towards monthly target of 10%. So I'm 2.1% of the way there, but so slightly behind. I would have preferred that to be 2.5%, obviously, at the end of week 1. But remember, this was from a standing start, so there were no carryover trades, there were no trades in play. Nothing happening, completely from a flat start. Yeah, reasonably pleased with that. But obviously, it's only week 1. There's a long way to go yet. So let me get rid of these. Onto a separate screen, and I'm going to talk you through the actual trades. Had a few questions that came through on eToro about some of the trades, so I'm just going to update you on all of those now. So let's look at the cable trade first off. The pound dollar. This was a Golden Gate strategy. Basically, that means price breaking through the simple moving average on averages on a range mode market, which is depicted by the yellow here. So what happened? This was Thursday. This was a holiday in the US. Nothing really happened. I rolled in a tight stop ahead of non-farm payrolls on Friday. It was positive for the dollar, or the reaction was positive on Friday. We got this strong push down here. We closed the week on this is the daily chart. We didn't manage to close below this low here on the week. So as far as my market analysis is concerned, we are still in range mode. If we'd have closed below this, then that would have reverted to a bearish mode. But in terms of my analysis, what I'm doing, because within the range we got this kind of trend set up here, 50 simple moving average, 30 exponential moving average, and 10 exponential moving average, all pointing down in the right direction, then I'm going to hold this position now for as long as I can. I'll start to exit this position once these exponential moving averages start to cross back over one another. But although we didn't close below this level here, given the sentiment in the markets and my sentiment indicator, my opinion, there is more bearish price action to come. So you've got to hold your winners and cut your losers short. So that's what I'm doing now, holding onto the winner, which is quite a nice position to be in. And if you think about that, people buying here, their stops are going to be under here. If there's any pressure down, they're going to have to sell quickly, they're going to have to sell their position, their bid position. They're going to have to sell it quickly, which is what fuels the market. The stop losses being pressed is what fuels the market in any particular direction. And people up here, like myself, who are sold up here, we've no reason to get out. We're quite happy. Our time frame is longer. We're quite happy to hold and wait. Whereas here, if people's stops are pressed, they're going to have to get out quickly. So there's time pressure on them to get out. And this is what Jason Jankowski, who taught me a great deal about trading, a number of years ago now, talks about in his book Time Compression, the pressure to get out of the market. Got to find the losing trader. The losing trader's here. Bang, we want to be contrarian. We want to be against that losing trader. Okay, so let me move now to the Australian dollar, which I traded at the start of the week. This was a little bit of a frustrating trade. What happened is I sold off this candle up here at the top of the range. We then came down, we traded down to the 50 simple moving average. My target was here to take off half the position. There was then a bounce and we then traded back up. We're now trading back down. So I got out with a small incremental profit, the difference between my entry here and my stop loss here. Yeah, not clear on what this market is doing. What I'm looking at now for the Aussie dollar, I would look for a close below the 200 simple moving average on the 4-hour chart. That would give me a golden gate strategy setup where I could sell into the bottom of the range. But for the moment, not doing anything with the Aussie. That's pretty much it for me until we get that close below. With hindsight, would have been better to have my target here on the 50 simple moving average level, but it wouldn't give me the necessary 1-to-1 risk reward to target 1, so or to T, I should say. So yeah, you live and learn. But didn't lose anything on this position. Was a winning trade, so that's fine. Capital preservation is really what it's all about. Let's look now at US dollar CAD. Okay, so yeah, sold here on a full house strategy, got a Z signal, basically all the simple moving averages pointing in the same direction, the sentiment indicator pointing in the same direction. So we traded down. I talked about this in the previous recording. We didn't hit the target. I've raised this target slightly now. We didn't hit the target. And then we bounced back. This was basically a non-farm payroll reaction. Bounced back, tested the 50 simple moving average, and then now the market closed, looking to be trading down in the direction that I kind of anticipated based on my setup. I'd roll my stop aggressively. The reason I'd done that is ahead of the news, so I was stopped out for a small profit on this. This actually turned out to be a small loss in eToro, frustratingly, because of what I spoke about on the previous video. But you know, preserve capital. That's fine. What I'm looking to do now is see where we are when we open on Sunday. If I get another signal, you know, these candles, strong signals to the south side. If I get another signal, or perhaps a trade back up into the 50, I'll short again. And get back on that ride. But yeah, not a highly profitable trade, but a winning trade nonetheless. Okay, so I was asked on eToro forums about my Euro Japanese yen trade, so let's jump into that. Takes a little bit of a minute to load. While I do that, I should say that in fact, while I do that, let me drag this across again. Let me just talk about this here. So I have a couple of statistics here that I look at in terms of winning trades and performance. And this figure here is basically the reward to risk that I took. So the risk that I took and the reward that I gained as a result. So if you think about £1,000 risk per trade at the moment, and I took out £121.38 on that particular Aussie dollar trade. So that, in terms of reward to risk, was 0.12. Now what I'm looking for this number to be is more like 2.0. So at least I'm securing 2 to 1. So these numbers are quite low, and the reason being we've kind of hit target 1, reversed back, or not hit target 1, and I've been quite aggressive with my trailing stop. This week, wanting to preserve capital and get off to a good start. This number here is the potential of, actually let's check, yeah, potential captured. So the number of points or pips I captured as a percentage of those that were available while I was in an open trade. And again, these numbers are quite low. I'm looking for these to be higher. So I'm just going to monitor this as we go. It's been a winning week, but you know, with these numbers higher, it's going to be even better. So I just need to monitor those numbers, and I can talk more about those in future weekly videos. Okay, so let's talk about Euro Japanese yen, which quite handily we've landed on here. So this was a Golden Gate strategy. I sold, having crossed through these two simple moving averages. The market then basically just traded sideways, didn't hit my initial target here. I got an X reversal candle here. I thought, okay, let's lock in a little bit of profit. If this market reverses, which it has, it's stopped me out. It now looks like it's trading down. So not quite sure which way we're going there. There's not really a trade on the table for me here now that I'm out of the Golden Gate strategy. I wouldn't get back in here because we are beyond where the entry point was. Where I have a range mode on my charts, I only trade range strategies, which is selling up here, buying down here, or selling or buying on the move through the moving averages down the middle of the range usually. So there's nothing on the table for me here. What I'm going to be looking for now is see where we are here. Could be a range bottom buy, or maybe a close below here for a bearish move, and then the trend or full house strategies once we're in trend mode. So that's Euro Japanese yen, and then finally let's go to my where are we? Commodity synthetics. I like that word, synthetics. Some people call these crosses. I call them synthetics because technically they're not against the dollar, so they're a kind of cross pairs, synthetic pairs. So that's what I call them. Okay, so handily we've landed on this as well. This is my CAD Swiss franc setup. So this is the daily charts. You can see the moving averages are down the middle. If I go to the 240, it'll let me while it loads. I don't really need to actually. So basically I've got an order entry here, a sell limit up here to sell if we trigger the top of the range, to come back down here. It's not triggered as yet, but we're not too far off. There was some positive CAD news on Friday. We got, I think it was positive CAD news. In fact, was it? Doesn't really matter anyway. It's the reaction to the news that counts. But anyway, off the reaction, we got bids in CAD relative to the Swiss franc. In fact, no, on the US dollar CAD trade that I showed you earlier, it was principally US strength that drove that pair. But here, anyway, we had a push up on Friday. We didn't quite hit the target, so we closed out at, or the high rather, was 0.7589. My entry's at 0.7595. We may get a push up, trigger my sell limit. We may not. I'm not going to chase the market. We will see, but that sell limit is there. So that's a really quick whistle-stop tour for those of you following my challenge. Thank you for following, by the way. This is the first video I've done for YouTube under STG. Not the first video I've done ever, but the first video I've done under STG FOREX TV. So if you've liked it, please subscribe. Please hit the notification button. Perhaps give it a like, give it a share. Perhaps spread the word. I'd be very grateful if you would do that. I'm recording one of these each week, really just charting what I'm thinking, what I'm doing. Not sure whether I'm 100% happy with all the content I've put out this week. I'm going to get better at that. I think I can tell the story of the trades a little bit better. But I've got a guy helping me edit these videos to make them look a bit more professional, who's doing a great job. But I think in terms of the raw content, I perhaps need to make these slightly shorter, a bit more punchier. So bear with me. We live and learn in life, and that's what I'll be doing as we move forward. So I'm going to sign off now. Enjoy the weekend. I'll be back in the markets on Sunday doing my analysis, and then back in with the blogs next week, telling the story of the 36-month Forex challenge. So until then, take care, and I'll talk to you soon.